Traders, what's up? Jamie Setley here. It is the midweek strategy webinar, and we are going to go through a bunch of the dollar. And Peter, right off the bat, says, "Can you look at S&Ps?" Yeah, of course, we will take a look at it. Hey, before we start, just give me some confirmation that you guys can hear me and that you can see the screen. It's all good, says Peter. All right, super. Okay, so before we get into S&Ps, Peter, I just first, if you don't mind, assuming you'll be here for the whole thing, but we're going to look at US dollar, big things here. So funny enough, volatility in the equity markets has kind of calmed down a little bit, right? And we are getting serious breakouts in the dollar, breakdowns in the dollar, breakouts in currencies. So first off, here's this is actually 4-hour chart. I have it zoomed in. So we are at like a possible bounce level for US dollar, okay? I don't know if we're going to bounce. I have no idea. I'm bearish the dollar here for sure, but if we do get a bounce, I'd almost prefer one, I guess, just to be able to load up even more on the short side of the dollar. But if we do get a bounce, I would think that as high as you go is probably 12,367. All right, you can see just with your eyes there, simple horizontal level. I don't know if you bounce that much. I'm just saying if you do, right? You just want to have levels outlined. It's also the underside of the parallel that was support just last week and early this week. So that's where you want to look. Now, downside levels of interest, okay, are going to be 12,236. That is actually the year open. It's also pretty close to the top side of the trend line that goes all the way back to the highs from 2017. Okay, that line connects the high from December 2018, and the only reason I'm paying attention to it is because it was kind of a launch off point for the July rally. Okay, so you do have something kind of near there, call it that general area. It's also the half extension of this channel, so the distance from here to the center line extended downwards. Now the full channel extension is going to be a more important spot, and that's all the way down close to like 12,140. And that's really where you could have more of a kind of a panicky, drop into that level. And that's, probably want to be aware of that spot is all I'm saying. All right, DXY, more or less euro, also 4-hour chart, a beauty of a break here. Remember the 200-day average on this, going to the daily chart, is going to be a wee bit lower, 97.36, and that is where we're looking for now. As I was explaining to somebody earlier, the real, like the full-on massive goodbye dollar for a long time level is the line off of the Jan and June lows, okay? We can actually go back to our comparison with DXY from 1998 actually on this. Let's do that. Let's scroll all the way back. So just remember the kind of the flat, again, everything from here just being a diagonal, right? Kind of went through the top of it, and once you go through the bottom, kiss this thing goodbye for a long time. We're literally talking dollar crash scenario at that point. So if I go back to 1998, just to give you kind of a template, what we're talking about here. Okay, here you go. So that would be equivalent to like the lows from January 98 and May 98, right? So if we went down through here, right, that's the current line. And then crash, bounce, crash. Okay, so all I'm saying is a drop below there actually does complete the full-on diagonal. Okay. Yep, so that would be right here. So that's your equivalent level to 1998, and then who knows what happens after that. But if we scroll into this, again, if you do get a bounce, I would kind of watch the median line around 97, 90s. Euro is a beauty of a chart in its own right. Okay, so center line, we've got such a great fork to work with here. High today, 111.39.9. Can't make that up. Out of half here at 11.25. And I do think we go a lot higher, but did want to lighten up a little bit. And we pull back, watch for the center line support at like 110.90. Now, understanding the character of the move that you're in is important. So I think that we are in a third of a third wave, 1 2 1 2. Okay. And then this is a 3 of 3. So what that gets you is essentially you shouldn't expect too many, or you should not expect pullbacks to be very big. Like if you're going to get pullbacks, be pretty minor. So even looking for 1090 might be much. I don't know, but that's simply the level to look at. So again, 1140 to 1160 is going to be a spot where you could pause a bit today, maybe into next week. We'll see. And then 110.90 is that center line, and that should hold if we are in a third of a third higher, right? That was previous resistance, and then you consolidate around it, right? And then we had kind of a big spike this morning during Europe on it and then extended through the US session. So clearly the market is adhering or respecting this median line or the structure. So pay attention to it. I think 112.40 is probably the next spot. In fact, let's see if we can get some fibs on it. We have gone a 1618 of this, so reasonable to take something of anyway. Be a strong holder. 1250s would be that level. Okay, let's see what we got here. 1180s, whatever. So you're looking at 1240-ish is the next spot up, and followed by the line from the January June line, just like in DXY, and that's currently up about 113. So that's where things get really, really interesting. Okay. So those are your levels. Bottom line, heading into Friday, 110.90 could pull back from 1140, 1160. 110.90 support to take this higher still. All right. British pounds. Simply the chart from the other day. This is the updated chart. Now, remember, US dollar is on a support level, so we don't know if it's going to break here or if you're going to bounce, but you have to consider the potential for a bounce. So that means that you'd probably like to have, a little dollar long arrow in your quiver, at least something that you could watch to potentially fade this move, even if it's for just a bounce. And I actually think that pound is a spot to consider it. I know it's probably dangerous considering all the Brexit news flow and whatnot, but if you're sitting, in front of your desk during these headlines, you can actually do quite well. Simply have the levels outlined though, okay? So you can see the median line. We pulled back literally 8 pips from the center line. That was yesterday during a Brexit headline. The spike this morning got really close to the upper parallel. We had that at 130 to 130.50 the other day, and 130.50 is kind of where we are tomorrow. So if you get another one of those headlines, you spike into 130.50, I would consider, fading that. Please use stops, especially with the Brexit stuff. And bottom line is you've got the center line as still a support area, and that's at this point going to be essentially 127 to 127.50. So I'd head into tomorrow open to fading 130.50 and covering and even buying 127 to 127.50. So again, with the Brexit headlines, ranges this big, okay, from 300 pips over the course of a day is not that crazy of a thought. All right. Also, if we take a peek at euro pound, by the way, go to weekly chart. You are at the 200-week average, okay? And yesterday we did have, or the last 2 days we have had some big candles down here. So, you know, euro pound bounce, not a crazy idea. So I don't know. Consider the idea of fading up in the 130.50 area on the pound dollar. Okay, commodity currencies, nothing to add here. We are getting close to getting limited, targeted out, or limited out, whatever you want to call it, in dollar CAD, looking for the tag of 130.90s, 131-ish, whatever. How to approach this: if you come down here and you get a really big response, like a big reversal, you could have a long idea. You know, if we come down here and break, then we'd be probably looking at the underside of this line as a potential, you know, resistance level. So open to multiple things, but bottom line is you are getting to a decision point, right? 5 waves down, 2 legs down from the September high, 131, taking out this low 131, and the trend line from 2017, 2018. I should say line, it's not really a trend line yet, but the line from 2017, 2018, it's a perfect channel. It nailed the top up here. So there's a lot here. Be silly not to take it. Keep a target down there. If you want to know exactly where that line is today, it's like 130.77. All right. Okay. Aussie and Kiwi, great setups here as well. Held on to that Aussie through the number, and it served us well. I think that we might have something to work with here on the long side. So yesterday's chart, we did talk about the possibility of a gigantic bear trap, right? There you go. Okay. All right, there you go. So big support. Now remember when I say this prolonged decline, okay? Because the entire pattern, all that trading, for one, all that trading below 67.39 over here, and now you're back above it, that's springing a bear trap. Moves out of bear traps can be violent, all right? Like today's just the beginning, perhaps. This price action, okay, everything from August, the August low, it has the look of what you'd call a head and shoulders, right? In this case, a continuation. Now, context is key. There's a name for this pattern. It's called a fulcrum, or compound fulcrum, excuse me. They happen, they're really rare, and they happen after prolonged declines, okay? And what it looks like is a head and shoulders continuation pattern, but then it essentially fails and the market goes screaming higher. So they're powerful patterns, they're rare patterns. They, again, need to show up after a period of prolonged weakness. I think this probably qualifies from the January 2018 high. Prolonged weakness indeed, choppy as hell, but indeed prolonged weakness. So we've got that going for us. We've got the bear trap possibility going for us. And now we've got a fork to work with here as well. So here's the fork. August low, September high, October low. Again, could pause up near 68.40 or something. If you pull back from there, I'm watching for support to add to this, probably in the 60.70 or 67.75 to 95 region. All right, just up here, that blue parallel, which you can see crosses some beauty levels. So there you go, 67.75, 95. I'm not even going to put a target on this at this point. When you look at the longer term Australian dollar chart, hold on. I think it's pretty clear that the 70 region up here, okay, is pretty important. So that would probably be a pausing point or the next big test if we do indeed continue on this path. Okay. So I'd like to do my best to hold on to the Aussie long, add to it, see if we can hold on until 70. All right, dollar yen. I'm going through, I was doing writing my post here for tonight a little earlier. Hold on. I'm gonna bring that in. All right, so what we're looking at with dollar yen is one, gold and Japanese yen. Okay, this is Japanese yen, not dollar yen, but Japanese yen and gold. All right. You know, over time they tend to move together, right? It's well known they're both kind of zero interest bearing instruments, but they've been moving even closer together. Actually, funny enough, over kind of the recent years when rates have been low everywhere. So what we're looking at here, my point is when is gold a buy? Gold's a buy when dollar yen's a sell, aka yen's a buy. Okay, now not always. I'm just saying it could help to time it. My thinking is that dollar yen near term we've come into support, so I think that this is a spot to attempt to buy, you know, dollar yen. Okay, I'd be looking to buy it. I'll put out an order probably tonight. Looking to buy it with a stop, fairly tight stop, and looking for 109.70, maybe even 110.50. 110.50 is where you get two equal legs. Okay, it's also the top of the channel from the low. It's also the 2018 trend line, which was crazy. You know, crosses through crazy levels, right? I mean, all last year before the collapse, and April of this year, of course. So that's a big level. Now, after that level, okay, now we bring in the context, right? Wave counts. Long-term chart, 5 down. From here, 2015, I think we are A, B, going lower in C. Okay, B's done. B is done. It's done as a triangle itself, A, B, C, D, E. We have an impulse down 1. We're getting close to completing wave 2. Wave 2 either completes, in my opinion, at 109.70, the year open and underside of the trend line, or 110.50. All right. Then you go into wave 3 down, and that's going to take you 1,500 pips lower or something. I mean, something wild. Okay, 1,000 plus pips. Let's just go there. So you want to know where the big swing is in yen and in gold. When gold could go back up, it's probably when yen enters its third wave. Okay, then we have, you know, during this period, gold was soaring, right? Since then, gold consolidated and it turned up after the high over here, right? In dollar yen, the low in yen, low in gold. Okay, since then we've kind of consolidated in this fourth wave in gold, which I'll get to, and now we are nearing the next big buy point for gold and yen. Okay, so here we are. I think that gold still bottoms near 1440 or so. But here's the deal, like wave 2 really took, you know, up until, well, if you measure from, let's actually bring in a chart here. Hold on for a second. All right, here we go. Okay, so 50 days there and 63 days to here. My point is, fourth waves are usually a little more complex than, like, you know, 50. Okay, so that would be there. All right. Fourth waves are usually a little more, drawn out and complex than second waves. So you usually want to see the time equivalent be at least as long as the second wave. You won't even have that until November 13th at the earliest, and maybe even December 2nd latest. So while I still think 1440s is the area for big support in gold, it doesn't necessarily mean that you have to go straight into wave 5 then. It could be the low point in price, but not in time. So you could come down here, find support, bounce, screw around for a little bit, and then some point in mid-November to early December, then the market takes off like a bat out of hell. All right, and we go for the next big target, which is going to be probably up in the mid 1700s or something like that. And here is that chart as well. So this is the chart. This goes all the way back. This is the basically life of gold trend line since the the end of the gold standard. And what we're looking at is the center line for that entire channel is the 1440s, and that's why I'm saying it's such an important spot to pay attention to, right? It was huge resistance for a couple of years. Even this year, when we went up to it, we consolidated, then we burst through, come back, and then you want to find support on that line. Just think of this as the slingshot that we're doing in euro dollar right now, right? Pull back 1090, go higher. That same thing, but on a much grander scale. All right. Okay, so there's that. I did have question on S&Ps, which I will certainly get to. If you have any other questions on any other markets, please let me know, and I'll do my best to answer them. Pete says oil, you got it. All right, so here S&Ps, 4-hour chart, the minis, I'm basically just following the channel from the June low. And really there's no change to kind of my opinion, if you will, or what I was mentioning the other day. Okay, the center line here is obviously the key level. Why do I say obviously? Because look at what it's done recently. Support like to the tick on the 27th, resistance for a couple days early this month. Okay, support here on the 14th. Even draw a little trend line, it probably intersects it at some point soon. Well, not really. Be way over here. It's like the end of October. Maybe you go there, I don't know. Anyway, my point is if you do pull back, and this isn't a bad place to pull back from, you can see the levels over here, support, resistance, this is where the last sell-off came from. Then 2960, 263 is probably going to be a level to watch for support. Basically, you hold that and you're constructive, okay? You don't hold that, then something's changed and you're in for a deeper pullback, maybe as low as 2911. But from here, just know 2960s. That's it, all right? Then we can go for another high. NASDAQ futures center line is a little bit higher, like I said, 80.15 or so. Pull back there, I'd say 870, 800 support is going to be support for NASDAQ futures. So 80.15, 7,800. Pooja asking about Kiwi. I will go through it real quick. We went through it before, but I'm gonna. Actually, no, I didn't go through it. I forgot. I think you're right. We went through Aussie. Kiwi's beauty. Kiwi is a beauty. So the long-term chart for Kiwi looks great. That's Kiwi yen, not Kiwi. So here's that Kiwi chart, right? I had a better one. Where'd it go? Probably this one. Yeah. Long-term chart, support. Thinking 64.20s is going to be a spot to pay attention to. Near term, though, it actually looks a bit more bullish. So 64.20s is up here. Eventually, sometime next week, we might be looking more like 65 if this plays out, because here's your fork. It's just a beauty. Tagged it today. I would really love a pullback to buy up, well, for myself, but put it if you would, it's where I'd look to add actually in your case, but watch that 25 line, all those spike highs over here, right? Pink line means it's a high volume level. That was 63.13. Okay, so here's the volume chart. You can see where that came from. Okay, so yeah, let's see if we can get that 63.13 for support. If you do, again, 64.20s, and then ultimately you're talking 64.90 or so, which would be the 50% retrace of the move down from July. And you've just got simply a lot of important price action there. I mean, lows from May, lows from June, August support, August resistance. I mean, it's clear as day. So that's where I would look towards Puja. All right, let's take a look at crude oil. Still doing its best to hold up and trade between these levels over here. The fork here, 75 line hold, got pretty close to the center line, failed, came back up. To me, it looks like it's basing for a bigger move at this point. Originally I was looking for resistance over here around 55 or so, but considering we got the move up and now we're turning back up again, I would think if you do go for another move here, then you could actually get maybe some median line gap risk, acceleration risk, if you want to call that, maybe all the way back up to the 58.30 area. Okay. All right. Anybody else before I wrap it up and get this archived? Nope, nope, nope. All right, going once, going twice. All right, I will talk to you guys later. Have a great rest of your week and a great weekend, and getting some exciting price action finally happening in FX land. I can't believe it. All right, talk to you guys later. Bye.